Thank you very much for coming today. My name is Ali Koçak. I'm the president of the Turkish American Chamber of Commerce and Industry. Our first speaker today will be Michael Zmorod. Michael is the principal with more than 15 years of diversified accounting experience in the taxation of asset management clientele, with emphasis on private equity and broker dealers. Michael's experience includes cross sections with other accounting areas, and including partnerships, corporations, S corporations, etc. Michael has a bachelor's degree from George Southern University and MBA from St. John's University, and he is a licensed CPA in the state of New York. I would like to thank him for accepting our invitation.
Thank you for the opportunity to present to you today. I'm honored to be in front of you. So today's presentation revolves around these economic times we're experiencing with the COVID-19. And the way I approach this presentation is I want to put myself in your shoes. I would like to provide you with the tools and the knowledge from a tax and accounting perspective on what to do to keep your business afloat in these cash-strapped times. So with that, a court of caution before I proceed, just keep note that tax laws and regulations are complex and depend on specific circumstances. So before you listen to our presentation, but always please consult with your tax advisor for next steps. In terms of presentation outline and objectives and roadmap, I broke this presentation into 3 sections. One of them, I want to focus on the business. If you are a business taxpayer, I'll provide you with the tools to increase your cash liquidity. I'm going to also share some individual CARES Reform Act that might help you as an individual taxpayer. And I'm going to discuss a couple of things just briefly about the tax return extension deadline that the IRS has extended to all taxpayers. As everyone knows, back in a few weeks ago, it might sound like eternity, but back in March 27, Coronavirus Aid, Relief, and Economic Security Act was passed. And in it has significant tax provisions to assist individuals and businesses that are adversely impacted by the COVID-19 pandemic. 2 main programs came out of it. One of them is the Paycheck Protection Program. I'm going to refer to it as PPP because in our industry we love acronyms. And the other one is Economic Injury Disaster Loan, EIDL. To dive into the PPP, bear in mind that there was a pool of around 349 billion, yes, that's in B, that was earmarked to small businesses. And if, just an idea of what we're going through, that pool depleted in less than 2 weeks. If you did not apply within the first few days, you were out of luck. But fortunately for you, for round 2, another pool became available of around 310 billion that was signed into legislation last week. One of the main interesting things when I go into who qualifies and what are these programs available to, I'm sure you've been hearing, just make sure before you apply, you qualify for this program. You've heard on the news the stories about Shake Shack and LA Lakers. They are not classified as small businesses, but they applied and they got actually quite a large sum of money. But with that, Stephen Mnuchin, our Treasury Secretary, vowed that any loans in excess of $2 million will be audited. So just bear that in mind. But who are these loans available to? They are loans available to small businesses as defined by the Small Business Association. For those who have less than 500 employees, you can be a sole proprietor, independent contractor, or self-employed. If you are in the hotel and food services with fewer than 500 employees, and there's a code that applies to your business that starts with 72, you're eligible. But before diving into the details, just be careful of your affiliation rules. If you are owned by a foreign entity, if you own multiple companies, just keep that in mind and verify that you're eligible before you apply. You don't want the affiliation rules kind of trip you up. If you are strapped for cash and you want to pay your employees, you can get a loan of up to $10 million, and the loan will be measured up to 2.5 your monthly average payroll cost for the fiscal year 2019, or if you'd like to, you can use your 12-month trailing payroll costs from the date of the PPP application. But what are the definition of payroll costs? That's going to be the tricky thing. And basically what the SBA said is these costs are mainly a compensation that come in the form of salaries and wages. They are limited to $100,000 per employee plus benefits. You can tag those on top. Vacation payments, health insurance premiums, unemployment tax, employer contribution to pension plan and 401k are considered payroll costs. Keep in mind that if you have employees who are not US residents, those are excluded. Said otherwise, if there's a US citizen who works for your company, but he or she is residing overseas, that employee is not eligible. However, on the other hand, permanent lawful residents are eligible. And the best part about this is that these loans up to $10 million are forgivable. In my entire career, I haven't seen anything quite like this. Of course, if our certain criteria are met. The features, again, these are forgivable loan. Any amount that's not forgivable can turn into a 2-year loan with only a 1.0% interest rate. You can defer these payments, no prepayment penalty, no collateral is required. You do not have to provide personal guarantees as long as 75% of this loan is geared and paid towards payroll costs. How you can apply to your bank, banks are limiting to their local existing customers, but there are a couple institutions out there like Cabbage.com you can apply to if your bank is not up and running with these programs. Some of them encounter difficulties. But there are a couple of options out there you can seek and apply through. So now to make sure you're eligible for this forgiveness, there are a couple of criteria that you have to meet. One of them, you have to spend the money within 8 weeks after receipt of the loan, and as long as 75% of that loan is spent towards payroll cost. The other 25 can be spent on rent, utilities, and mortgage interest. And the best part about this in the tax world that we live in, the loan that's forgiven is not taxable, which is quite extraordinary. If you, like irregular corporations in regular time or business individual, and you have a loan that gets forgiven, that becomes taxable, not in this case. So it's highly recommended if you apply, you need the money, go for it. So again, these are the uses that you can put the loan to that I mentioned: rent, utilities, payments of interest on any mortgage, and payroll costs. Of course, there's like a couple of tricks in here. You have to keep a count of your full-time equivalent employees. SBA refer to these as FTE. And there are certain dates. Once you keep your it doesn't need to be perfect, but you need to keep your pool of employees within these dates that are mentioned here from February 15th to April 26th, and you still be eligible for the loan forgiveness. Let's see. Now let's go into a different program. It's called the Economic Injury Disaster Loan. We refer to it as EIDL. This loan is not forgivable, unfortunately, but you can seek funds up to $2 million. They can be used for any business purpose, but not the same purpose as PPP. And you can apply for both loans. If you apply for PPP, you can also apply for an EIDL loan. Once you apply for this loan, within 3 days, you can get $10,000 grant. If you get denied, you can still keep that $10,000. And anything less or under $200,000 does not require a personal guarantee, but any loan in excess of $200,000 and up to $2 million, you have to put up a personal guarantee. And the way you apply is you go directly through the SBA. This is a more convoluted process. It's not as quick and easy as the PPP, but again, this is a solid loan. The other one is a grant that can be forgiven. And here are the terms of this loan: 3.75%. You can extend it to 30 years, defer the payment up to 12 months, no prepayment penalties, and unfortunately, again, no forgiveness opportunities available through the EIDL loan. Okay, here I'm gonna dive into some miscellaneous credits and deductions that might be available. There's a work retention credit that you can use as a business owner. One of the main items that excited our clients at UHY is the deferment of your employee payroll taxes. It's 50% of it can be deferred until December 31, 2021, and the remaining 50% up until 2022. These are the FICA taxes that the employer pays on behalf of the employees, the 6.2% FICA taxes I'm referring to. And also give businesses some charitable contributions, increased limitations if you are into charitable contributions that you can take as a deduction. Now I'm going to go into a couple of topics, and before I go into those, I'm going to keep things general. I'm not going to go into details and the technicalities behind it. But if you are a taxpayer sitting right now and you're seeking more liquidity, I urge you to look into your 2018 and 2019, if those are filed tax returns. And there are a few opportunities that you need to reach out to your tax accountant. There can be an opportunity where you can amend returns and get some cash back as a refund. One of those is net operating losses. And without going into too much detail, I can tell you in the past, historically, net operating losses for corporations can be carried back 2 years and forward 20 years to offset any taxable income. If you recall, back in December 2017, the Tax Cut and Jobs Act that was passed by Congress unfortunately eliminated those 2-year carryback. And now they say you can only carry it forward, but guess what? It's limited to 80% of future taxable income, not 100. It was a little disappointment for the taxpayers. However, with the CARES Act that was passed in March, all this has changed. Now, net operating losses beginning in years 2018, 2019, and 2020 can be carried back to 5 years. If you encountered any net operating losses in 2018, 2019, and you have taxable gains in the past, I urge you to look into this and reach out to your the tax advisors, and you can there's an opportunity here for getting some refunds. If you have the next topic, it relates to interest deduction limitations. If you have a loan, the TCJA Act kind of limited that to 30%. And now with the CARES Provision Act, it came up and said, you know what, you are limited now to 50% of your ATI, which is adjustable taxable income. And again, that has some definitions and technicalities. I'm going to spare you all those. But again, for corporations, you can expand this pool of deductibility from 30 to 50%. And for partnerships, unfortunately, this is only available in 2020, unlike corporations when it's available in 2019 and 2020. If you are in the real estate business, I'm going to spend 1 minute on something we refer to as the qualified improvement property. And again, because we like acronyms, we gave it an acronym of QIP. If you have qualified improvement properties, the CARES Act, by correcting a technical oversight, but the TCJA did back in 2017, extended a 15-year recovery period instead of the 39-year, and made these properties eligible for bonus depreciation. This can be huge if you're in the real estate industry. You can take accelerated depreciation and you can get a refund. Let's see what else here. In terms of individuals, I'm sure everyone maybe on the call have heard about all these tax rebates the Congress has allotted to individuals, the $1,200 check for individuals or $2,400 for joint filers. If you have kids under 17 years of age, they're eligible for $500. Most of these should have been out. You can check the Treasury or the IRS website, and will tell you what the status of your check is at. Of course, there are limitations to these. If you have adjusted gross income of individual less than 75,000 or 150 for married for joint filers. If you are into charitable contributions, starting in 2020, you are able to get $300 worth of deduction. If you unfortunately have a need for cash, one of your family members is not feeling well or experiencing medical expenses, The Congress with the CARES Act allowed you to dip into your pension funds or retirement funds and retrieve up to $100,000 without incurring the 10% penalty. And that can be repaid within 3 years. And you can also borrow not 50, which was the previous law. Now the CARES Act increased that up to $100,000. And it also waived the required minimum distributions for pensions starting in 2020. Lastly, I just want to briefly mention that, okay, this is a little, maybe everyone should know about this by now, but in the tax world, now we're referring to it as July 15th is the new April 15th. And with that, what I mean is that all these tax returns, individuals or institutions, mainly partnership that were due on April 15th, now are due on July 15th. Not only the tax return, but any tax amount due that was due on April 15th got extended until July 15th to give taxpayer more time because of the COVID-19 pandemic. And with that, I'll pause here.
Thank you, Michael. Thank you